The Bank of Canada is not about to save the housing market. We are right now in neutral rate territory. And although most economists still do believe that Bank of Canada is going to continue to cut in 2025, I don't think it's really going to make a difference. The number one question from potential sellers or sellers that are currently on the market is, well, will another rate cut help get more action on my property, help my home get sold faster? So let's talk about why I don't think that's going to be the case. Let's explain the neutral rate. I'm going to show you a chart to really break things down. My name's Tom. I run a real estate team here in the city of Toronto. If you like this video, get subscribed, like it, do all those great things. But today we're talking about the neutral rate and the Bank of Canada because everyone's so focused on what Bank of Canada does or does not do. And yes, right now, as of filming this video, we're at 2.75. We were at 5%. And then before everything went crazy, we were as low as 0.25%. So there's been a ton that's happened with the Bank of Canada going up and then going down. But right now, the Bank of Canada is saying that their neutral rate, and we can call it the Goldilocks rate, where they're not trying to stimulate the economy, but they're not trying to cool it off. They're just going to try to keep it steady. They're saying is between 2.25 and 3.25. So we're currently in that neutral rate. We're at 2.75%. So even if TIF does decide to cut rates a few more times in 2025, I don't think it's going to change what's happening in the overall housing market here in Canada. And I'm going to show you why. Okay, so let's take a look at this and break this down. So what this line is showing here is what the overnight rate has been doing. And you can see, it was very, very low. And then we went very, very high. We got to 5%. And now we've, gone down actually pretty quickly as well to 2.75%. Now this area here is the current neutral rate. That neutral rate changes over time when Bank of Canada is looking at things. They tell you where they believe the neutral rate is. So the overnight rate right now is 2.75, but we were in the neutral rate already. So let's say Bank of Canada does cut 2 times more this year, both 25-point cuts. That would take us to 2.25%, which it would put us near the bottom of the neutral rate, but it still wouldn't put us into stimulating the overall economy range. And that's why I believe that unless Bank of Canada, and I don't know what's going to happen, obviously, but if Bank of Canada gets under 2% and they start stimulating things and get as low as 1.5%, that's where I think it could have a meaningful change on what happens with housing prices. But right now, at least 2025 sellers on the market now, or even buyers just tracking things, it's not going to make a difference. If they cut 2 more times, even 3 more times, if it gets to 2%, it's not stimulating the economy that much. Now, I recognize real estate is not the entire economy, but it is Canada that we're talking about here. And interest rates are a massive talking point to a lot of consumers. And even though the Bank of Canada, when they make changes, is only impacting the variable rate, it still makes the news headlines and people talk about it. And I've heard this question more than any other question so far this year. If Bank of Canada cuts again, will it make a difference? And this is my reasoning to tell you that no, I don't think it's going to make a difference in any meaningful way. Pricing your property where it needs to be positioned in today's market is why you're going to sell, not hoping that TIF and the Bank of Canada kind of help you by stimulating the economy. I don't think it's going to happen here in 2025. If you've been watching the channel for a while, you know that we've always had kind of 3 main pillars that we are watching to see what could or could not happen with housing prices in Canada. The first pillar is interest rates. And right now, overall, I get they're higher than they were, but interest rates, I think, are actually in a pretty okay space. The second pillar we look at is immigration or population growth. And that could be just for one province. You have interprovincial immigration happening, or it could be people actually moving to Canada. And we know those numbers are significantly lower than they used to be. And then the third pillar, which is arguably the most important, is the unemployment rate. People don't have jobs. They can't get mortgages. They can't buy houses. People lose their jobs. They can't pay their mortgage. They have to sell their house, right? So there's all these different things that we look at. So yes, even if the Bank of Canada is in the neutral rate, there's been many, many times over the years where the Bank of Canada is in the neutral rate, but housing prices still go up or go down. So I'm not saying that it can't change in that zone when it's in that zone, but right now in 2025, I don't think they're going to make enough of a change to actually stimulate things in terms of prices changing in any meaningful way. And although those are the 3 pillars, what's the most important thing here? It's consumer confidence. Look at the sales numbers. The sales numbers are very, very low. People are transacting, but they're transacting when they're 100% certain. And a lot of people want that certainty. And there's still lots of things going on in the world that we don't have any control over that we want answers to before a lot of us make decisions. So is the Bank of Canada going to save the housing market in 2025? Simple answer, from my opinion, is absolutely not. If you're a buyer, be strategic. We're helping buyers every single week buy properties in this market, and we're getting really, really good prices. And sellers are getting sold, but they're positioning themselves in the market as the best available option because buyers have choices. And if you want to sell, you got to make sure that you stand out. I want sellers to ask yourself this question. Take a look at everything for sale in your area, including your property, and ask yourself, would you rebuy your home? Or would you buy one of the other ones for sale? If the answer is not rebuy your home, you're not positioned where you have to be pricing wise. Thanks for watching. Hope you learned something new. My name is Tom Storey. And remember, home is where your story begins.